Welcome, G-traders. Analysts believe that the Fed still has an opportunity to engineer a soft landing thanks to a recent drop in commodity prices and the strong labor market. However, the regulator should be very careful in order to avoid a recession and a higher inflation. At the same time, a few investors are betting on such an optimistic scenario. The majority is bracing for a gloomy one. Today, traders are cautious ahead of the US inflation data, although they were expecting the June CPI figures to rise to 9% from 8%. Even the smallest increase above the anticipated level may affect market sentiment. Such a situation occurred in April. Back then, the reading amounted to 8.3% after 8.5% in March. So, traders are well aware that something similar may happen once again, and this is why they stay alert, expecting the worst. And for several months, recession and inflation fears have been weighing on markets. Analysts note that some investors are so confused that they have stopped trading for a while. As for the Fed, its future move on the key rates seems pretty clear. Several policymakers, including Jerome Powell, backed a 75 basis point rate hike. So, at the July meeting, the regulator is highly likely to raise the benchmark rate by 75 basis points. And the US dollar index has consolidated today above 108 points, namely at the level of 108.19 in anticipation of inflation data. During the Asian session, it was trading in the upward price corridor of 108.05 and 108.39. It has already approached a two-decade high amid aggressive monetary tightening and its safe haven status. Now the greenback is moving up even despite a drop in the US Treasury yields. Usually, the movements have a high correlation. Mike Wilson, the chief U.S. equity strategist for Morgan Stanley, reckons that a strong dollar combined with the inflation spells trouble for U.S. companies, especially multinational ones. Each pip the US dollar has gained compared to last year, it's out 0.5% of earnings per stock. Over the year, the US dollar index has grown by about 16%. It means that shares included in the S&P 500 may lose about 8% in earnings per share. The US dollar has risen the most versus the yen. Over the past year, the yen has decreased by 20% against the greenback. The depreciation of the yen is primarily associated with the ultra-soft monetary policy of the Bank of Japan and the hawkish one of the Fed. While the Fed is aggressively hiking the key rate, the Bank of Japan is easing monetary policy by buying an unlimited amount of bonds at a fixed rate. As a result, the yen saw the fastest depreciation since 2015. On the Monday, the dollar-yen pair exceeded 137.75, which is the high of September 1998. Today, the pair reached 136, where traders locked in profits. The yen has asserted strength as a safe haven asset amid a risk aversion. The decline in the US government bond yields also boosted its growth. The difference in the Fed and the Bank of Japan interest rates narrowed, providing additional support to the yen. However, shortly after, the US dollar spread its wings. So the dollar-yen pair climbed again to 137.14. In the Asian session, it was fluctuating in the price range between 136.66 and 137.26. The Australian dollar took advantage of a pause in the greenback's rally and rose slightly. Today, judging by the trading chart, the Aussie is trying to consolidate at the levels reached overnight, aiming at 0.6779. However, the AUD USD pair is still hovering near multi-year lows and below the trend line of October 2021. At the same time, analysts believe that in the near future, the bearish trend will prevail. In the Asian session, the pair was moving in the narrow range between the resistance level of 0.6783 and the support level of 0.6742. The New Zealand dollar also climbed a little bit to the level of 0.6135 against the US currency. The Kiwi remains weak. At the start of this week, the NZD-USD pair decreased to new multi-year lows. The New Zealand and Australian dollars were affected by the decline in commodity prices, yet the Kiwi almost did not react to the rate increase by 50 basis points by the central bank. Why? As the risk currency, it will pick up a trajectory after the release of the US inflation data. The White House expects June's consumer price index figures to be highly elevated. The pair is trading in the upward channel of 0.6106 and 0.6144. And that's all for now. Subscribe to our channel and have the latest market news at your fingertips. Feel free to leave your comments down below and see you soon.